Well, G Shipping is the next company which we're speaking with. They reported a big set of second quarter numbers. Revenues were up 10%, while EBITDA margin contracted. We'll talk more about the numbers and what the state of affairs for shipping rates are going to look like in this new environment. G Shivakumar is Executive Director and Chief Financial Officer of the company. Mr. Shivakumar, good morning. Great to have you with us here. Things have been in Q2, but I think both you and your investors would want to know where things could be with what's happened, dramatic events in the US. And I think shipping markets have been impacted because of all these conflicts which have been going on, right? Red Sea, Russia, Ukraine, etc. Let's imagine for a moment that by the 30th of January, you've got some of these easing off, these conflicts easing off. We don't know how, but I mean that's been a big campaign promise, and we've heard the president-elect saying in the U.S. that I intend to keep my promises. So let's assume that's the case. What do you expect the impact on shipping rates to be on crude and product carriers for dry bulk? Give us a sense.
Yeah, morning, Prashant. Thanks for having me. It's a bit speculative, but based on what has been said so far, there are a couple of conflicts going on which have affected rates in the last 2 years or so. One is, of course, the Russia-Ukraine conflict. The second one is what's happening in the Red Sea, where the traffic through the Red Sea has been impacted because of the Houthis attacking ships that are passing by. If the Red Sea attacks stop, then you would have a reversal of that ton-mile impact. In dry bulk, the impact would be limited because it originally had a limited impact of maybe 2% to the demand for ships. In crude tankers also, it had a fairly limited impact. In product tankers, it had more of an impact. And in the sector that we are not present, it had a much bigger impact, which is containers. As far as Russia-Ukraine is concerned, it's going to be a big impact if the whole trade pattern reverses. However, you'll have to see all the things that have to fall into place for the entire trade pattern to reverse. In the sense, do you see Europe going back to a very large level of energy dependence on Russia? Or is it going to only partly come back? So that equation is a little complicated. The Red Sea equation, not so much.
But you're saying that the Russia-Ukraine one is the big one. If that conflict were to stop and it goes back to pre-2021, I think it was, right? Kind of situation. I mean, that'll have a tremendous impact on shipping rates.
That's right. It'll have certainly a short-term impact on shipping rates. What has also happened is because of the hot markets, tanker markets have been very hot for the last 2.5 years because of this conflict. It started in early 22. And because the market has been so hot, a lot of ships which would normally have got fleet because of age have been able to run for longer because they're making so much money and because the demand for ships is so high. Typically, when you have a weak market, those ships are very vulnerable and will get removed, which brings the market back into balance. Again, this takes some time to play out. So in a year or two, that would play out. But in the meantime, you would have very weak markets. If that trade change reverses 100%, which again is not the base case that we would put in.
And the most impact will be on product tankers, right? Which for you is... Sorry, go on.
Sorry, the product tankers impact that I was talking about, the highest impact was because of the Red Sea disruption.
Okay.
Russia had an impact on product tankers and crude tankers. So about equal for both, maybe a little bit more for product tankers.
Okay. And for crude tankers, for you, I mean, in terms of rates, it's 100%, all of it is fixed, right? And in terms of product tankers, I thought it was about 30% fixed.
Yeah, crude tankers are 100% spot
correct.
exposed.
Sorry, spot.
And product tankers are about 30% fixed, so about 70% spot related.
Okay. So, I mean, we could be looking at over the next, depending on how things move over the next 2 quarters, a big sort of impact one way or the other. But it's all, of course, up in the air right now.
Yeah, if it has that impact and the markets drop, obviously we are sitting very under leveraged and with a lot of cash, and we are looking for opportunities to buy, get in some good ships at good prices.
Okay. That, I mean, if what we're talking about were to materialize, that would be your response function. You would be in the market to buy ships.
Absolutely.
Okay.
Absolutely. We are keenly waiting for an opportunity to buy, and now it's been quite some time since we did an expansion.
Okay. All right. Got that, Mr. Shivakumar. Thank you very much for joining us. Appreciate you being here on CNBC TV18. Thank you for taking out the time. So that's G Shipping. Stocks, I think, about 6.5% lower at about 1,210. This is, of course, I think, in the pre-open session as the rates are starting to show up.